and welcome. This is a very special edition of a special show, the NPA Fix, that we're getting to you live right here on ET Now. This is a mega ET Now exclusive because we're picking up for sources that in a very, very decisive move to end the NPA mess, the government is perhaps going to outsource the resolution of big defaults of over 100 crore rupees to a pricing committee which will comprise of members from the judiciary and also banking experts. This committee will not just validate, certify, but even will take a very controversial call on haircuts and what kind of a haircut should banks be taking. There is about 8 lakh crore worth of stressed asset in India's banking system, and the idea is that it has been identified, it has been contained. How do you resolve this? It's an issue that has divided the expert community completely. People with their skin in the game and India's top bankers believe it's a great move, will resolve the crisis definitely in the short term. But there are others, former bankers, economic thinkers and opinion makers, who all believe that this is perhaps not the best thing to have happened as far as India's banking space is concerned. Banks should be independent, banks should be autonomous to take those decisions, and which is why I have a very expert panel of people joining us right here on the NPA mess and the NPA Fix, that is. We've got Rana Kapoor, Managing Director and CEO of Yes Bank; Chakrabarty, the former Deputy Governor of RBI; Ashvin, Managing Partner of Ashvin Advisory Services. We've got Sunil, Kanoria, President of ASSOCHAM, and of course Neotia joining us all the way from Kolkata. He represents FICCI as its president right here on our show. Thanks very much each one of you for being with us. I'm going to first begin then with the naysayers, and prominent amongst them, let me begin with Chakrabarty. Sir, you've been a banker, you've also been a central banker, a pricing committee to which the decision to take a haircut is going to be outsourced. Is it a move that you believe is a step in the right direction? Will it help solve the NPA mess?
I don't think it is going to solve the problem of NPA mess. You see, NPA mess has been created for certain regions. Regions are well known. But if we are saying that now haircut, pricing committee, I don't understand what is the meaning of this committee. I only know if somebody has borrowed from the bank, he is supposed to pay back the entire amount. And nobody else can decide about any need to compromise other than the banks themselves. So I don't know, it will create a big problem. Now in future, it will happen the same thing. People will take the loan from the bank, they will not pay, they will create a mess. Again, we will say that there will be haircut. My third question is that why it is restricted only to people of less than 100 crores? What happens, or more than 100 crores? What happens to the people who have borrowed from less than 100 crores? Maybe their case is more deserving. Now this is open a Pandora's box. Will be not able to decide the things, and if anything happens, the provision and write-off amount which has been created, about 5 trillion rupees has been created, that will be sacrificed. It is not a very good thing. It should have been left to the individual banks how they would like to take the decision. If we feel that bank management is not competent enough to take such decision, we must change the bank management.
All right, I've got a banker on my panel here, and banker par excellence, Mr. Rana Kapoor, joins us live right here on ET Now. Thanks very much, Mr. Kapoor, for being with us. I know you have a contrarian view on this, and let me get your opinion then. A pricing committee that is going to decide on haircuts, that is going to validate and certify the NPAs, the defaults. Many people believe this is a step in the right direction, will empower the right decision to be taken place, something that banks are innately shying away from. Do you believe it's a step in the right direction, one that will resolve the NPA crisis, Mr. Kapoor? All right, I think there's a trouble with that line, but let's take it across to Sunil Kanoria, again somebody who's got his skin in the game, is invested in the infrastructure sector, a sector that has seen a lot of stalled projects and stressed assets. Mr. Kanoria, do you believe pricing committee is the most decisive step in resolving the NPA crisis?
Well, I think this may be a short-term measure for addressing a particular issue, but I think in the long term, or actually what should have been done, is the banks have a strong boards, and there are eminent people in the boards, professionals are there. So I think these are things best left at the board level, and they should be empowered enough, given the right guidance, empowerment, regulatory framework from the Reserve Bank of India and the ministry, so that they can take decisions without the fear of the 3 C's in the country. that CBI will be after them or CAG will be after them. So these are things which is basically haunts banking system for not taking decisions. So therefore it is very important for a long-term basis for the economy to ensure that the banking system, the boards itself are and the management themselves are given the enough authority, powers to be able to take decisions without such fear. And there are mechanisms which can be built. However, because we have a lack of that, so this is a measure which is being done. My major concern in this process is gets more longer. It is then not taken commercially, because people look at it not commercially but on a technical basis. Businesses cannot be solved, solutions in business cannot be solved technically. It needs to be solved business and commercially. And I think that's where the problem will be in this panel. I suggest that in this panel there must be representative from the industry also. It cannot be only left to bankers, because let me tell you, if we see the past couple of years, it is not only the industry which has done their mistakes, or the government which went into problems because of lack of governance. The judiciary went into problem because of wrong judicial pronouncements. The banking system also, if you really look at the past 4-5 years, what was happening when a project gets delayed and is part funded, the project has been delayed due to whatever factors it may have been. When the banks lend further money, they take it back as interest, because they have to ensure that they don't have an NPA. So if you really take up projects of the last 4-5 years, most projects, 40 to 70% of the project cost is interest cost, whereby banks have given money and taken it away as interest. So real money has not flown into the system, into the project. It has basically gone in postponing the bankers' NPL issues in the past few years.
All right, and before I take it over to Harsh Neotia, I do have Rana Kapoor back on the line with me, and thank you very much, Mr. Kapoor, for joining us. You are the banker amidst us, and you perhaps understand and realize this issue than some of us here do. But I must ask you this question: do you believe a pricing committee that is going to take the controversial call of a haircut, or verify, or validate and certify, is a step in the right direction as resolving NPA crisis is concerned? Everybody knows what is an NPA, but nobody seems to be getting a fix to resolve it, because bankers are adamant on one hand and promoters on the other.
You see, NPAs and write-offs which have been very persistent in the system need to be handled, and they need to be energized, and they need to be liquidated. They need to be converted back to capital, because we are a capital starved country. So at least in my judgment, this measure which has been announced or in the process of getting enacted is a very good development, because what it does is it takes the impasse in the system, the deadlock in the system on NPAs out. It takes the fear out of the system out. So what it does is that it starts moving the wheels of the economy, it starts lubricating the mechanism required for recovery. Because when I look at NPAs, NPAs are high probability recoveries, medium, low or zero. So the problem today is that I can understand that there is a zero factor, but at the same time the medium and high probability NPAs, they should not get stuck, and they should get liquidated, as in like monetized. And I think this is a measure that on a top-down basis at least will start moving the wheels of the economy, get the ball rolling, and create a certain momentum which is absolutely very necessary to rebuild the confidence and conviction amongst the banks and the boards and the leadership that we mean business, and we are not going to waste capital, because idle capital is a value destroyer.
Mr. Kapoor, you perhaps hit the nail on its head, and which is why I'm going to ask you the next question, that as a banker, will you admit and will you make a confession that there is an environment of mistrust, and which is why it is very difficult for bankers today to take that decision of a haircut, because they could be hauled up by investigative agencies many years later, whether it's the CAG, the CVC or the CBI. So there is an environment of mistrust, and bankers are not willing to take those decisions. Will you agree with me there?
You see, I cannot but agree with you, because if you look at the headline point is banking is a public trust institution business. Let's start from the very top. And number two, if there is any mistrust which has crept into the system, that needs to be in a way exited. To do that, you have to create a process, you have to create a system which has transparency, it has bona fides, and it rebuilds the credibility of a system which has become somewhat questionable on ethics, on integrity. And I think this is a good step, because what happens is that if you get the wheels moving and if you get the system in a way engineered with proper future architecture, risk management architecture, decision making architecture, and let's face it, in banking you have cycle. This is the macroeconomic business. You will have problems, but the problem doesn't mean that people have to become static. They must dynamically solve problems. So I think this is a good catalyst to move things forward, get out of inertia, and slowly change the gears, get the system moving.
You make a lot of sense there, and I think that's the voice that the government and the finance ministry would want to hear. But Mr. Neotia, you're joining us all the way from Kolkata. We really appreciate you taking time out this evening. But are you also someone who believes that one of the reasons why no consensus has eluded the bankers and the defaulters is because they are wary of making those decisions, the controversial haircut decisions, for which they could be hauled up many, many years later?
I'm sure an overhang of this anxiety might be there on certain bankers' minds, because at the end of the day, it does lead to some amount of subjectivity. When you look at a situation, you have to, there is no one shoe fits all sizes kind of approach that can be taken, and they have to be customized from case to case. So naturally there is subjectivity, naturally there is a certain amount of discretion, and there could be these kind of concerns that some bankers must be facing.
Ashvin, Parekh, I want you to come into this entire debate. The banker on the panel believes that this is going to act like a catalyst, will remove the inertia. What is your take on this? I know this is almost a function outsourced, and I'm going to get Mr. Chakrabarty involved into that discussion. But if I may ask you, prima facie, things are not moving. Bankers and defaulters are not seeing eye to eye. There is a common ground that's eluding the whole resolution process right now. This is perhaps the most pragmatic way forward. Would you agree with us, or do you have a different point of view there?
No, I entirely agree. I mean, at this point in time, I think let's look at our priorities. With the NPA numbers going the way they are, and with capital, under pressure, I mean, the government has to put in a certain order of capital, private sector banking will have to put in a certain order of capital to manage those NPAs, to fund those NPAs. In a situation such as this, even if a good, let's say, proposal of haircut comes up before the bankers, and if the bankers cannot make decision, we've got one live case before us, and then we're looking at, let's say, the recovery of a possible 4,000 to 6,000 crores. We're shying away from making decision only because, so many new questions through the judiciary process have now suddenly sprung up. Through the investing agencies, the new questions have sprung up. Ideally, I thought, before they become complex issues and recovery becomes even more difficult to manage, if a panel can, and it can be a short-term panel, it can be a panel which is constituted for another year or two, we must restore, the confidence of the bankers, and we must go back to a situation where the banks boards and the bankers are themselves making those decisions. But that I'm seeing can happen only after 2 or 3 years. During that time, if you're looking at something like 800,000 crores of NPAs or doubtful, let's say, asset setting in the banking balance sheets, we must have measures such as this. I mean, I particularly find that this is a very pragmatic approach, at least where the decision is happening fast and the money comes back to the banking system quickly,
And that's also perhaps a rationale. It's a short-term committee that they're looking at, and in the long term, banks perhaps will be empowered to take the decision. But Mr. Kapoor, there's a contrarian question that's coming your way. In some sense, the setting up of this committee is, of course, a pragmatic, practical move, like both you and Mr. Parekh believe there. But it also is an indication that the banking system in India has failed to make the decisions that it ought to have made.
You see, the banking system in India, we have to understand, is the backbone of our whole economy. Just because it is going through a bad patch, and a couple of vertebrae have become weak doesn't mean the system has collapsed. We have to get it back on the right track, and we have to get it back into motion. And I think measures like this and many other measures that have been taken in terms of, the 5/25, if you look at the totality of all the solutions that seems to be in the making from a Reserve Bank of India standpoint as well as from a Government of India standpoint, I think they seem to be converging and recognizing and realizing that the issues that are creating speed breakers in the economy need to be in a way resolved. And I think what we have to recognize is that there is economic value, and we cannot let that economic value sit idle. The moment it becomes idle, it starts losing value for the bankers and naturally also for the owners. So we must get out of the static into a dynamic process, and I think a methodology like this is being contemplated. This panel or committee should be able to get the systems moving. And I made this comment earlier when I spoke to you in the afternoon that number two, if this panel gets the motion going, the momentum going, then eventually the bank boards and the bank managements need to be empowered to make these decisions. We must embolden them, we must create frameworks for them and proper accountability so that there's no witch hunting after they retire or they get transferred. We must not believe in the process. We must have a clean sheet analysis, give them a clean slate once they leave, so there are no repercussions of good decision making. And India needs bold decision making in banking. We are a growing economy. Almost 90 to 95% of our banking growth is predicated on banks providing credit. We are not sufficiently disintermediated to let the convertible markets and other instruments really prevail, because there are very few other products that substitute for bank credit. So I am very convinced that this is a very good measure. It gets the system going.
That's a valid point that you're making, but not a point essentially your co-panelist, Mr. K.C. Chakrabarty, agrees with. And Mr. Chakrabarty, the question then is, I have two questions your way. Mr. Kapoor made a very valid argument that there is economic value that can't sit idle in the system, and you should address that economic value, and that's the only way to put the virtuous cycle of investments and growth back into motion. So that's question number one. And question number two also is that, will you agree with me when I say that outsourcing of this to a panel or to a committee, the pricing committee, is perhaps the biggest admission that the Indian banking system has failed to take the calls that it has been authorized to take?
You see, look, first thing is that, Maithili, you must say that you are saying bankers. I have been a banker for 30 years. And believe me, in the banking system, I have taken decision. And if you take the decision without any malified intention, nothing can happen to you. But yes, because it is a public service, people will ask the question and you must explain that thing. Now, if we are saying that this type of environment is discouraging the banks from taking the decision, believe me, in future banks will be not able to sanction a loan, they will be not able to decide the pricing of their products and services, many other things will happen. I have no problem of creating the economic value, but economic value cannot be created, only banks' loan has to be written off. What is the economic value will be added by the borrower, it is not known. So all these things is happening because there is a 5 trillion rupees of write-off and the provision amount is already there in the books of the bank. Banks need to sacrifice. This will kill the credit system. Any credit system hinges on basic two premises. One is the fellow who borrows the money from the bank, he has an obligation to pay, let whatever may happen. And second thing, people who are lending the money, they must do the proper due diligence that this person has ability to pay back. If something has gone wrong, without rectifying the basic two mistake of these things, the basic premises of the lending system, if we are trying to bring that some value has there lying in the books of the bank, write it off and make it more easier for the people who have taken the money from the banks, have not paid, to encourage them, to help them, I think it is the great thing. Yes, I have no problem if all the existing promoters, they are thrown out of the door, and the entire sacrifice amount of economic value has been given to the new set of promoters, yes,
Right.
then there is a sense. But if we are saying that it is the same set of borrower will add to the economic value, we are killing the credit system. It is the most dangerous thing which is going to happen. That is my experience
Fair
of
point.
banking for the last 30 years. All I say,
Right.
that decision making has to be encouraged in the banking. It cannot be
I
outsourced.
understand
We'll
that,
be
and
killing
we
the
appreciate
banking
your
system.
point of putting that point across, that decision making has to be left to the bankers to do and should not be done outside. I encourage that point, and that is an ideal situation, and I am going to get Mr. Kapoor to answer those questions because he is a banker amongst us. But Sunil Kanoria, you somebody who is invested in the infrastructure space, you've got your skin in the game there, and we have seen that infrastructure has seen the maximum number of stalled projects, has contributed a lot to that stressed assets. I would presume this is a lifeline that is coming for a sector like yours, Mr. Kanoria?
I would not say it is a lifeline. There are many other ways of handling the problem. There are certain regulatory issues which needs to be corrected also. You need, in an environment of such, I'm definitely not against it, I must say that. I think you need at least something to happen. So if some progress is happening in creating a mechanism of taking decisions, these are mechanisms of taking decisions. So therefore, I must be very clear that yes, from that perspective, in the short run, this is a good step. But I think it is very important to ensure and look at the practical issues which are there and address those issues. Like for example, today many of the projects can be revived if basically either a change of management happens, or even with the same management, basically the sponsors, the bankers take a call of converting part of their debt into equity, which they are doing through SDR. But rather than having a drive to convert or sell the equity in 18 months, transfer it to a fund, get professional expertise to manage the fund, turn around the businesses and the companies. Why sell India cheap? We are trying to work out to get foreign investment and all, make huge haircuts just because you have an NPA, and sell your asset cheap. I don't think that is the only solution. Yes, wherever assets and the buyers are there, let it be left to the commercial decision of the banking system and the lenders and the investors.
All right, I'm not going to waste any more time on the commercial decisions, but I have a question for Mr. Kapoor there. Mr. Kapoor, while I agree with you and while I agree with Mr. Parekh here on the show that, it's a pragmatic decision that is being made, at least to fix the problem in the short term. What are the chances that a decision made by this panel could not be looked at with suspicion? I mean, look at the kind of mistrust or an environment of mistrust there is, whether it's policy making, whether it's the relationship between government and industry on one hand. Are you confident that a decision taken by this committee will not be looked at with the same suspicion?
See, Supriya, I'll tell you very candidly that this is basically it's like a super board committee, right? So we have 27 public sector banks. They have one super board committee, instead of having like plenty of committees which only face indecision. So let's look at the visual which is surrounding this possibility, right? And I think if there is a super board committee which has a single promoter, the government of India, and has transparency, has credibility, has trust, and can rejuvenate the public banking system, which I think is probably the single biggest challenge in terms of decision making. And I am very happy to see that a move like this can energize the system, get the wheels moving, and then create an architecture. The next step is to create a board architecture, to create a board system, which is the committee of the board that is accountable to the board of directors, and naturally there are representatives of Government of India and Reserve Bank of India on these boards. So the fact is, right now everything is stuck. There's a log jam in the system. So we must view a change like this, because unless a problem is solved in the short term and the medium term, in the long term we're all dead, right? Not only NPAs. So I think as a short term measure to get the rehabilitation of the banking system in the government, to get it going, this is a very good step. Number two, then you put concurrently good risk architecture in the banks, good board committees, internal and external, and number 3, put the capital in place, because the capital should be not good money after bad money, but good money that is going to create a multiplier in the economy, right? So I think this is a step which I believe has got an impact, a positive impact, if handled properly.
All right, a step that has got a positive impact if handled properly. Ashvin, Parekh, you're someone who also believes this is a step in the right direction. Do you essentially believe what Mr. Kapoor is saying, that this is going to be a super board of sorts, and this is being done with a well-intention? But are you somebody who's as optimistic that this is not going to be looked at with very suspicious eyes?
Well, actually, not really. Let's look at it this way. You know, I mean, first and foremost is, let's make the fundamental assumption that the banking system and this panel will actually work together. That is, even when this panel has to arrive at a haircut or a pricing decision, where is it going to get the evidence from? The evidence of the extent of price cut is available with the bankers, with the banking system. The panel will have to trust and rely and work with the banking system. So if some borrower or a certain situation demands a certain order of haircut, the evidence gathering and all can be done by the banks to begin with. Second is, what are we talking about? We're talking about making decisions to restore the economic value of the assets, get the assets back into the system so that they start performing. Whether they perform under borrower 1 or borrower 2 does not really matter. But what is important is that for the economy, it's very important, and that's where I thought this policy decision on the part of the government is something I would totally subscribe to, and that is, let's not worry too much about either running after borrowers or running after the bankers on one side and worry who's making decisions. Let's make at least a decision making mechanism, you know, in certain order that everybody can work together. You know, then the borrower gets a good opportunity of putting up his case, knowing that there will be a resolution. The banker knows that he is protected in some form. The fear element is removed, and the resolution happens faster.
And it's not as if this panel is going to be divorced from the banking system. Mr. Sunil Kanoria, as we wrap up things, I have a second last question on this panel, and it's coming your way. Do you believe the pricing committee is coming a year too late? I mean, look at where the NPA mess is right now. Acceptable limit is 3 to 4%. If only it had come a year earlier.
Well, in hindsight, we can always say things are this thing. It's been a learning and not accepting that there was a problem. See, what we have been saying, and I've been saying it over the last year or so, year and a half, that there is a problem in the past, and we did not accept the problem. You see, when the financial crisis happened in the US, global crisis happened, India accepted that there was a global problem, and everyone worked together to find a solution. But this time around, because it was internal, people kept blaming each other, that either the banks are faulty, or the entrepreneurs are faulty, or the government is faulty, and therefore we didn't find a solution. We didn't accept that there is a problem. We were only doing a blame game. I think it's very important that we must accept that there was a systemic problem, and if we accept that and we then put in addressable mechanisms to address that issue, it gets much faster corrected. Also, the problem in India is we must realize that we do not have enough phenomenal resources in the government that we can keep pumping in and bringing in capital into the banking system. So we have to amortize the problem over a time, and that's where basically I believe that because of lack of the problem, you had a certain systemic issue. You monitor, you control, you bring in regulation, but you allow a certain level of amortization over the next 5 to 7 years, and then you will start to see recovery, improvement, things happening, as because we are seeing that better governance has started to happen in the last some time. More openness, more transparency is happening. So these will definitely give us results. So why not amortize the problem rather than saying that, okay, you ampute my foot today and cut it off. There may be a healing over a period of time.
Mr. Neotia, we're given to understand that this will be mentioned in the Rajya Sabha discussion and also in the Apex Code. Do you believe that kind of executive and judicial validity is what people will draw confidence from? Do you draw confidence from that?
Yes, I mean, looking at the fact that it has got into this kind of a rather contentious sort of, should I say, crossroad, I think that involving the legislature and the judiciary is welcome.
All right, we'll let the banker on the panel have the last say on this. And Mr. Kapoor, it's coming your way. Once the NPA mess is resolved, and we're keeping our fingers crossed that it will be, how soon do you expect the credit offtake to happen? And is the credit offtake stalled right now on account of just the NPA mess? Is there demand that you expect to build up in the system, whether it's the agrarian demand or whether it's demand from the manufacturing space or anywhere else that's coming?
I think, this subject is so important, and the panelists and Dr. Chakrabarty and Harsh and many others have made some fantastic points. The fact is we all want our economy to move, right? Right now, the monsoon prediction, the credit growth, the de-risking, and most of all, I think, short of 100% recognition of all problems and the provisioning around that, I hope is true of all public and private banks, has happened. Now the time has come to get out of the J curve in the economy and to start pumping in more credit and to start growing the economy, because there is demand which is building up, consumer demand, retail demand. I think the MSMEs are coming back nicely in the system, and the larger conglomerates, at least a few of them, are de-risking by monetizing assets. So I'm seeing the next 3 to 6 months, and certainly the Diwali cycle, the second half, which we call the busy monetary cycle of the economy, looking very encouraging. And I think we are just a few months away from a resurgence in our Indian economy, and naturally GDP growth will follow. And therefore, I think the banking system must build more optimism and take care of problems more proactively, and recognize that steps like this, strategic steps like this by Government of India, are unprecedented. And then if the system starts moving, then all of us gain. The multiplier effect in the economy will come. So I'm very, very optimistic over the next 3 to 4 months.
All right, tough times require innovative measures, and this is perhaps one of the strings of innovative measures that the government will have to bring about. The panel, of course, believes that something needs to be done about the NPA mess. Still a divided lot on whether banks should be doing it or the pricing committee. But thanks each one of you, Mr. Rana Kapoor, Mr. Harsh Neotia, Mr. Sunil Kanoria, Mr. K.C. Chakrabarty, and Mr. Ashvin Parekh for joining us as we discuss and debate the Mega ET Now exclusive, which is the first decisive step being taken by the government to fix the NPA mess. Thank you very much for joining us live right here on ET Now. We'll take a quick breather, and we're going to be back by Startup Central that you cannot afford to miss.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.